Replayers, welcome to the room. Kerr, what up? Diaz, what's up? True, what's up? Guys, we just took another 20 pips coming on the upside. So we broke through this 1377 level. Hola, April, what's up? I told you guys to take profits at around 1340, 1335. Prime went long at 1335. We're currently at 1358, so it's about 103 pips right now today. And essentially the only move we missed was right after the announcement. So you see, we avoided risk. Thanks to the hearts, guys. We avoided the risk of the announcement completely. And we used this price level at 1377 as our starting point to take position again. If I wanted to go heavy on the risk, I could have taken the news. We were short. Here, Prime did send a short signal from 418, 1418 down to 1377. Prime did short. However, we were not in that position because I didn't like the risk. And that is the discretionary aspect. If the risk is too high, I just avoid it completely. Flex, what's up? So guys, just a quick scope. 3 100 pip days in a row. And to this point in my life, I have never seen someone document 3 100 pip days in a row. So, a good week. A good week. A blessed week. Feeling blessed right now. Put in some time to this. Now we're starting to reap what we sowed. And what we sowed was too many damn hours. Too many late nights. Too many. Hey, you know what time I went to bed last night? 4 a.m. 4 a.m. 1 pip. It depends on the size of your lot. If you're on a micro lot, meaning 10,000, it would equal $1. And obviously, 10 times that, it would be $10. So if you're talking $100, you're talking about a million lot. So, I don't know what to say. I don't know what to say. I'm a little shocked myself. I'm a little shocked myself in terms of the how the system's performing. It seems like as the volatility increases, the system performs better, which is not common. You know, that in itself is a blessing because that means that we can use volatility to our advantage. We get to be in the market when there are very large swings. And that is a tremendous thing. If you're in the market when there's large swings, if you can profit in that environment, then that means that you can profit in any environment. You know, those are the environments that people shy away from. And if we're profiting in those environments, then, you know, from any point onward, it becomes easier because we don't have to worry about de-risking during the high volatility times. So that's where it's at right now, guys. Feeling blessed. I appreciate your support. You guys definitely helped me last night and every night when I'm staying up and coding and when I'm staying up and doing analysis and research. You guys are helping me a tremendous amount, knowing that you guys are holding me accountable and that if you guys are following along in the positions, I have a responsibility to you guys. You know, I'm not an investment advisor and I'm not managing your funds. However, I do feel that I have responsibility to you. You know, I don't want anybody losing on my watch. This price is still going up. Look at this. We're at 1360, so yeah, that's what it's about. Just keeping it real. You know, at this point, I'm probably, you know, It's 11:22 a.m. I just might cut this position. Yeah, Euro USD. I just might cut this position and then just call it a day. Take it early Friday. And we talked about this in an earlier scope. You got to know when to call it quits, guys. You don't have to be in every single move. Okay? If you have a great day, just call it a day. There is a such thing as overtrading. You can get cocky. Trading is the ultimate ego check, guys. Trading is the ultimate ego check. No matter how high you are up in your game, I don't care if you own a private jet. I don't care if you manage a billion-dollar fund or a multi-billion-dollar fund. You want to know what the ego check is? Let me show you what I was just reading. Check this out. Hashtag boom. Hedge fund momentum trade blows up with losses worst since 2009. Now, they're not talking about a single trade there. They're talking about the strategy of running a momentum fund having no returns. It was a large quarterly drop because there was so much volatility that momentum funds that were trading longer time frames in a time series, they could not profit because the volatility was too high. You could thank the Fed announcements for that. You can thank the news stories for that. But the bottom line is that that strategy did not work. You think those hedge funds would hire me right now? Well, they probably say, oh, you don't have a Harvard degree, so we're not going to hire you. That's fine. I'll take my money elsewhere. Because what you're staring at is money printing right here. However, if you go on to read that article, a few key things pop out. It talks about how momentum investing was the key factor to returns in hedge funds last year. And the guy goes on to say that when market neutral funds they break hard, meaning that they took hard losses. So, bottom line is that any strategy can fail. These guys have the most resources you could imagine. You want to talk about throwing money at skill level? These funds can hire anyone. Anyone. 150K. Some of these jobs pay for a start. 150K. If you're an algorithmic coder, it's usually twice that. If you're a great algorithmic coder, you can get twice that at a hedge fund. Showtime, what's up? It's a nice, cushy job. However, everything you create is owned by the fund. So it has its pluses, it has its minus, right? The plus is you have very little risk, right? You're creating for the fund takes on the risk. You're under their umbrella. As long as you perform, as long as you create things that perform, you make your money. However, there's a cap. You're never going to own it completely. You're not going to own your intellectual property completely. So that's the cap on that. Anyways, what I want you guys to do is read this article, okay? When you get a chance today, it's on Bloomberg. Just read this article. Alright? You can Google that. It'll show up. It'll be on their page all day today, most likely. And, yeah, I'm just going to cut this position right here at 1360. Can they make you sign a non-compete form, and would that hurt? Yes, they can do that. And as a matter of fact, it's generally known that if you change positions between funds, they'll make you take sometimes 6 months off. For 6 months, you won't be able to work at another fund, especially if you're in an executive position. That happened to one of my friends. He changed banks, and they made him take 3 months off because they don't want you stealing any relevant, timely information. Can you trade for yourself? Yeah, there's even prop shops that will take you on. If you have a small amount of money, you can trade prop shop money. The issue is that not a lot of people have a winning strategy, and so a lot of those places are revolving doors, and so most people will go to either a bank or a hedge fund and just create under their umbrella. So this way they remove the risk. You get a nice salary. You make a good living, a nice salary, but the fact is that you're capped, both in terms of your intellectual property and the amount of bonuses you can make. Bonuses tend to be hefty. But anyways, guys, I just want to give you an update. Are you planning to scope on weekends, specific times? I might. If I scope on weekends, obviously there's no market movement, so we might cover some theory. We might cover books that I like or something like that. So this way we can keep the content flowing. Saturday is a really great day to scope. A lot of people hop online, so I can't see myself going the entire weekend without scoping. We'll definitely scope on Sunday night. Education and articles, yeah. Cool. Yeah, we'll definitely scope on Sunday night at the least, because Sunday, of course, dictates the strategy going forward. Sunday will dictate the strategy for the week. I haven't checked the economic calendar to see if there's anything crazy going on next week. But I usually do that on the weekends. And we'll get a serious amount of coding done on the weekend as well. I'm going to update some things based upon the notes that I took for this week. And like I said, if there's 5 pips more that I want to grab, I want to grab those 5 pips more. It might seem like only 5 pips, but 5 pips is a lot when you start managing a bigger amount of money. So depending on the amount of your accounts, 5 pips could be a tremendous amount. 5 pips could be a tremendous amount, I was going to tell you guys one more thing. I wanted to tell you one more thing. But I'll think of it later. I'll probably hop on end of day just to give a weekly recap. Would you guys like that? I'll give a quick recap of the daily chart tonight when markets close before I head to the gym. If you guys would like that, just heart it up. Let me know. Hey Brahma, what's up? Thank you for joining, guys. Thank you for joining. If you're new to the room, here, hold on. I'm going to get my radio voice. You ready? Thank you for joining. If you're new to the room, this is Fit Businessman Periscope, where we kill pips daily. We're known as the pip murderers. We might be on death row for killing pips. It's pretty bad. I don't see us getting off for any amount of good behavior because we're just killing on a daily basis. We're just taking pips from the market, and that's what we do. I need to work on that a little bit. So we're still rising here, but like I said, you just got to know when to stop trading. At this point, we risk that this candle could turn around. We're about to hit 1365, so if I was taking off lots gradually, I would have took off at 1350, and now at 1365, I would have just took the rest off. Boom, out of the market, just like that. Because right now you can see that we're probably hitting a fib retracement. If we go from this candle down to here, I'm willing to bet that this level, because there's a lot of resistance here right now, it's a fib retracement. So let's take a quick look at that. Let's just do our fib. Let's just do our fibs. So we've already got past, actually, that fib level. How do you like that? Yeah, that level would be 1374. I wouldn't risk that it would make it there, though. I'll be completely honest. Because the 1377 fell so hard, I just wouldn't even risk making it there. And we were already, we would have already caught like about 115 pips so far today, so we just call it a day. But could it go there? Yeah, I'm willing to bet that there'll be a lot of sell orders at around 1370. A nice whole number. I wouldn't even let it get to 1374. If you were going to play the fibs on the retracement, I would say 1370, just take everything off. And even then, if you're risk averse, then I would just cut it right now. You know, it might make it there. It might make 1370, you know. See, it's creeping up. It just keeps creeping up. But you see how the algorithm actually is taking fibs into consideration already. Let's see if 1370 acts as resistance. Because it's a round number, guys. Remember when I told you about round numbers? People like to place sell orders at round numbers and buy orders at round numbers. So 1370. Let's say I wanted to be a really risky guy and not take it off at 1350 or 1365 where I had chances. Wow, look at that. Popped right through 1370. Let's see if 1374 gets taken out. There's a lot of orders in this area, 1377 to 1374. So I would expect this to act as resistance to the upside. What's up, guys? If you're new to the room, my name is Jay Salvati. I am an algorithm designer. I code the markets, especially Forex, where we kill pips daily. Right now, we're sitting 115 pips in profit. And we're watching to see if this fib level acts as resistance. Winery, what's up? How are you? So, you know, 1374 is definitely looking like a resistance point. At this point, you have to say what's the risk versus what's the reward. All right, you've already got so much reward under your belt. What are you trying to get? An extra 10 pips? You know, so at this point, you see how that fib is acting as resistance. You would just boop, cut your position, go have a coffee, go have some steak for lunch. Money does not sleep. Let me tell you something. Neither do I. Neither do I, guys. Neither do I. We're running a combination of an algorithm and the fib level right now, just to kind of see where the markets are. And you guys can see that fib levels do, in fact, retain a lot of power in Forex markets. Fib levels do retain a lot of power. So every time that this candle retraces, it's because there's sell orders of people taking their longs, or risky guys taking the sell as an entry position at this 1374 level, which is risky, you know. Even though we already broke through the 1377, I still consider it risky, especially because it's Friday, you know, it's almost 12 o'clock. The volume's going to start drying up. All of the guys on Wall Street, look at that candle, man. Line up to that fucking fib perfectly. That's awesome. You know, just a little illustration here for you guys, right? That's all we're looking at, is just the illustration. But the volume's going to start drying up, guys. People are going to start going to play golf with their buddies on a Friday afternoon. And so there's no reason to hold positions into the afternoon, especially since we already up 115 pips. All right? So you guys have a great weekend. I'll probably hop on this afternoon before I hit the gym and give a weekly recap of how we performed on the daily chart, which is awesome. All right? I actually might record that. I might put that recording on the back end because I'm going to put some time into it. So you guys have a great afternoon, a great morning. Make sure you have some steak and coffee. All right? Protein and caffeine solves a lot. To always remember that. Protein and caffeine solves a lot. Thanks, Kerr. Have a great one, guys.